Hello to all of you. Well, wonderful to have you back online. Amazing, actually, how many people have signed up and are joining us tonight on this webinar. Not sure if that's because it's an interesting topic or because people all over the world are sitting at home bored. I suppose you'll get to decide tonight whether we're going to be able to add some value too. So welcome to you. Wonderful to have you. What I always like to do is go into the dashboard. You'll see if you haven't used the webinar before, the dashboard's up on the top right-hand corner. You'll see there's a question bar. Just let us know where you're from. Let's make this as interactive as possible. You'll find that this webinar experience is far better if you actually participate. And while you're doing that, Lee, wonderful to have you online. You are a prisoner in South Africa because you can't get back to Saudi Arabia.
That is true. At the moment, I have an extended stay in South Africa. It's not bad at all. I'm surrounded by family and I'm safe and healthy, so that's great. But it is a little bit unnerving thinking that I can't get home at the moment. So there are tons of people around the world that are exactly in my position. So my heart goes out to them, but I am excited to be able to be on this and have so many other people who are joining us. I will be in the background fielding questions, throwing them out to Scott to make sure that all your questions do get answered. So at any time, please just pop a question in the question box and we will definitely try to get through all of those during this webinar. But it's great to have you online and looking forward to a very impactful webinar from Scott.
Awesome. I mean, we've got lots from South Africa, Bangalore, Seattle, Harare, Ireland, Namibia, Switzerland. So fantastic to see how many different people are joining from how many different places around the world. Okay, so we've got a fully packed schedule. I always get into trouble, and why I say I always get into trouble is that I always give people too much information. And it's one of the things that tonight you're going to have to bear with me, because this is me at a young age of 13. I did my first property or real estate project. At the age of 6, I did my first programming course when I literally learned to program a turtle called a logo turtle on a Commodore 64. And for my whole life, I've been trying to marry together technology and property. I did my dissertation in 1998 in Cape Town, South Africa, on how technology was going to change the property and construction industry. I did my master's in London on exactly the same topic. And so this is something that I'm deeply passionate about. And basically in my working career, I've spent the last 22 years trying to figure out how technology is going to get married together with property. And so in the next 90 minutes, I'm going to try and download and synthesize what we've learned in the last 22 years. As a young boy, I loved the game of Monopoly. Always thought about how can we turn this game into a real life game where we could play global Monopoly from all over the world. And then I'll talk more about it later, but the wealth gap, you know, we see the wealth gap every single day having grown up in Africa, and it's something that we have to solve. It's the greatest challenge on the planet. And so without further ado, I wanted to play a video for you, which I believe sums that up perfectly and will give you a bit of an introduction into tonight's webinar. Welcome. I want to invite you on a journey. So we're in interesting times. You know, these are just some headlines from the last 2 weeks or so. You got a sell-off of global, equities. I, interesting enough, had my uncle phone me this morning, and he basically told me my share portfolio wasn't worth a hell of a lot, and should I sell it? Now, if you've heard me talk a lot about my uncle, I always say to him, he's a highly esteemed investor, and I was like, Bill, surely this is not a time to be selling. But what's interesting is that people are starting to have a reality check about the stock market, the volatility of the stock market, the authentication of the stock market, and most importantly, the intrinsic value of the shares. You know, a lot of people have been talking about a global correction for a long time, and maybe Corona was just the catalyst that created it, but everyone was waiting for something. We've all seen headlines like these, be it the shutdown and being stuck at home, etc., or ones like this. And the question I have for you to start off with is, people are asking me all the time, what impact do I see it happening with regards to our business? What impact do I see it happening with regards to business in general, with regards to property? And so the first thing that I would say is that for me, it's all about cycles. You know, I'm not that old, but I'm also not that young, unfortunately. And I have seen a few cycles in the 22 years I've been in business. And what tends to happen in a cycle is that everyone always follows and focuses on this. They focus on this correction here. But what's really important is, whether you're talking about property or the stock market or business, you need to focus on the long-term fundamentals. You need to look at what are the facts, what are the fundamentals, what are the probabilities and the strategies, and most importantly, what are the long-term trends, and in which direction are those trends going. And it's something that becomes very, very apparent, which one needs to understand with regards to cycles. Just see here, okay, losing sound and freezes. Just let me know if anyone else is having problems with the sound. So what's interesting is that this is a graph that we made back in 2015. And you can see that it's called user engagement. And what it basically is that on the left-hand side, you've got consume, participate, transact, and invest. And on the right-hand side, you've got time. So what most people did when it came to the internet and the maturity of users on the internet is they started with publishing, reading stuff, sending emails. Then they started to get into social media, things like Facebook and sharing. Then they did e-commerce, you know, buying and selling stuff on the internet. And the final stage is investing online. In fact, it's where e-commerce and social media come together, and ultimately it forms social commerce. Now, just by the way, we're going to talk about it a little bit later, but social commerce is built on a foundation of blockchain in terms of where it's going. Now, what's fascinating for me when one looks at it is that as we've taken this progression, he who's going to win are the people that ultimately build businesses with annuity income, where they've got sticky money. So let me give you an example of sticky money. This is a very good example. This is a blue card that you should be seeing. It's the first bank card. Well, it's from the bank that gave me the first bank card back when I was 13 years old, an Auto Plus card. And to this day, I still bank with Standard Bank. Whether I like them or not is irrelevant. It's just too difficult to change banks. And that's a classic example of sticky money, because it's just too difficult to move. And ultimately, it's about increased share of wallet. So when people spend money, how do you get more wallet spent? So what do I think is happening with Corona, and what impact does it have on this graph? This graph was happening anyway. This graph was taking place. But what's fascinating is that people are being forced to go online and to do online adoption. You know, I've been working from home for 16 different years. I started in 2004. I cannot understand why anyone gets in a car and drives to work when I've worked from home since 2004. In 2004, we had a business. We had 3 offices in South Africa and 1 in London. We had to do everything by Skype back in those days. Then we moved to GoToMeeting. Now we're on Zoom. And yet last weekend we had a get together with all my university friends from UCT in Cape Town, South Africa. We had 17 people online from 6 different continents. And what blew me away was how primarily my commercial corporate mates, I couldn't use Zoom. I didn't even know how it works. And I ask you, how many of the rest of you have been forced online? How many of you have been forced to actually use online media, even online webinars? There's a little company that some of you might or might not have heard of called the JSC. And what's fascinating is that they're starting to have their first online AGMs. Now, sorry, I need a sip of water here. Now, we've been having our AGMs online for many years, probably since 2015. And the reason being is that we've got investors in multiple different countries. So there was no physical way for us to have a physical AGM. And yet, for the JSE and for Alexander Forbes, which is a massive financial company, they are being forced to have their first AGM online. So whether people like it or not, they have been forced to move online. And why is this important? Well, when you look at any adoption curve, you've always got the innovators, then you've got the early adopters, then you've got the early majority, finally you've got the late majority, and then you've got the laggards. So a great example of this would be internet banking. Or no, let's use one even before that, cell phones. So I got my first cell phone in 1999, and my mother told me it was extravagant. Anyway, I was 21 years old and I wanted to have a cell phone. It was my first year of working. And so I would have probably been, in this innovator, maybe even just early adopter stage. Now, every single person that, that can afford a cell phone has a cell phone. And very few, even the laggards, have cell phones because you actually can't live without a cell phone. Well, what about internet banking? Same thing. My mom was a late adopter on internet banking. And the reason being, she was worried about her money. She now does have internet banking, but she's only just got into e-commerce and actually buying stuff online. And I know at Christmas time, she bought 3 presents for my son and his 2 cousins, and only 2 turned up. And she said, I will never do, e-commerce online buying again. Well, what's happening with coronavirus is whether she likes it or not, she's being forced up this curve. And it's the same with Zoom, online meetings, online webinars, online events, and ultimately online investing. What's really interesting is that when you start off, someone like me that wanted to do online investing or internet banking or, cell phones even, I do it from a place of pleasure because I believe technology can make your life easier, simpler, and safer. Uber is a classic example of that. And what's most interesting is that most early adopters do it from a place of pleasure. What happens though is that Corona actually creates a place of pain. And whether we like it or not, it forces us up this adoption curve, again, whether we like it or not. What's fascinating, though, is when one looks at the research, people move 4 times more away from pain than they do towards pleasure. So if you come back to that stock market example, the stock market has lost 30–40%. That creates a lot of pain. It creates a lot of anxiety. You no longer trust the financial markets. You no longer trust certain financial instruments. That creates pain. And it starts to help you look. So rather than just going towards pleasure, you're moving away from pain. So I fundamentally believe that not only for our business, but for any other online business, whether it's education or investing, it's going to force people up the adoption curve. And as you can see, the value of the company, the market share, geometrically starts to increase once the majority gets involved. Now, I believe that we're probably only very much in these early innovator, early adopter stages. But what coronavirus is doing is that it's kicking us all into the 2020, the third decade of this millennium. And I believe it's going to have a big impact on moving the early adopters into the early majority, just like Zoom has, which has been fascinating for me to watch over the last couple of weeks. Now, I'm going to share with you later in the opportunity, in the webinar, an opportunity that if you like what you hear and you like the opportunity and you believe in online digital education and online investing, then I'm going to give you ways of how you can actually invest in the company, in the platform, and be part of one of the companies which is going to be part of the future. I'm also going to share with you a way to get 25% off our current valuation, and I'm also going to share with you a way where we've actually hedged the currency at 15 Rand to the dollars, even though it's peaked out over 18 Rand to the dollar. There are going to be ways for people to participate at 15 Rand to the dollar, but I'll explain that later. So, there's that great saying by Wayne Gretzky: a good player plays to where the puck is, a great hockey player plays to where the puck is going. And so the essence of tonight is not where the puck is. The essence of tonight is where the puck is going. And I want to share with you an insight. I want to open up a vision of where the future is. And with that vision of where the future is lies a lot of opportunity. Sorry. I can see I'm going to have some fun tonight with regards to drinking lots of water. So there was a guy called Ronald Wayne. Who was he? Now, if you thought that you were just going to turn up tonight and read your emails and play on social media, I'm going to try and engage your brain. I'm going to try and have as much fun with you as possible, because a mind that is learning is a mind that is growing, and a mind that is having fun is a mind that is going to be learning. So someone said here, who is Ronald Wayne? I'd love to know who Ronald Wayne is. No one? Anyone? I'll give you a little tip. Here's a clue. It's the logo up in the top right corner. Someone says one of the Apple's original startup founders. Someone said a rich guy. Someone said no clue, founder of Apple, co-founder of Apple, sold his shares for very little. Yep, you're right. It's the guy who in 1976 sold 10% of Apple for $2,300 that is now worth $70 billion. And what I always say to people is that it's a great metaphor, because sometimes in life we can get caught up in the now. We can get caught up in what is the coronavirus, and am I worried about catching it, and should I cleanse my hands, or we miss, we get caught up in short-term fear, and sometimes we miss a much bigger opportunity. Ronald Wayne was worried. He had invested his I don't know, $1,000 or something. He had only been at Apple for 11 weeks or 10 weeks or something, and he was worried that he was going to lose his money, and so he sold his 10% for $2,300. Today it's worth $70 billion. And so it's a great metaphor of sometimes the right information can come to you, and you need to understand the long-term trends and fundamentals and be able to make the right decisions. Now, when one looks at it, the oldest airline in the world is Delta. It was started in 1924. It's in 334 cities and 64 countries. It's got 80,000 employees. All of them are at home at the moment, and its value is $38 billion, which is fascinating because 50% of the value is actually in the airplanes. Now, I'm not going to dispute if the value has changed in the last couple of weeks, due to tourism. The principle is what I'm trying to show you. You compare it to an Uber, started in 2009, so literally 10 years ago. It's in 63 countries and 785 cities. It's got 22,000 employees, and it's worth over $50 billion. Now, what's interesting is that Uber had an IPO last year that didn't go successfully, and everyone poo-poos it and says there's a problem with Uber. But I challenge any single person that's on this webinar that doesn't enjoy the experience of Uber and would be mortified if Uber actually stopped, because we've got so used to using Uber and being able to travel around the world. What about Marriott Hotels? Started in 1927, 200,000 employees, 4,087 properties. It's in 80 different countries, 697,000 rooms around the world. It's worth $18 billion. And ironically, it was the first company to go online and to sell their rooms online in the internet in 1995. You compare them to Airbnb. They started in 2008. They've got 3,100 employees. They're in 81,000 cities and 191 countries. They've got over 5 million listings. So literally, nearly 8 times the size of Marriott Hotels, and they're worth $30-odd billion. So what is really interesting to me is that when you look at this adoption curve over the last 5 years, is that there's been a dramatic increase in value, which has been created when technology companies have disrupted an industry. And what's so interesting for me is that, some of these might have pulled back. You can see it goes out, you can see it comes back over time from 2014 through to 2020. This is from the Wall Street Journal. But you can see all the different types of industries which are being impacted, and the tremendous amount of value which is created when a technology company actually disrupts an industry. And you can see what's happening here over the time as the companies go up and they go down, but you can see the transgression over time. Let's just let it run its course here. I think you get the point. So what's important is that any one of these brands that you recognize, whether it's Amazon, Uber, EasyJet, Facebook, Airbnb, Google, eBay, etc., there's only three things they've done. They've cut out the middlemen, they've cut the costs, and they've dramatically increased the trust, the transparency, and the accessibility. Now, when you look at it, we've all seen this slide before, or many of us have seen this slide, where Uber's the largest transport company without cars, Facebook the largest media company without content, Alibaba the largest retailer with no inventory, Airbnb the largest accommodation provider with no real estate. What's fascinating to me is I always ask people, what is the one thing that makes these companies similar? There's one word that I'm looking for, and I'd love to know if you could figure it out. And while I'm waiting for that one word, there's another point to these companies which is really interesting. So I had the privilege of going to study at Singularity University, which is the exponential university out of Silicon Valley. It's actually on the NASA campus in San Francisco. And there were some great teachers there, and they basically said that whenever you want to find an industry which is going to be disrupted by technology, and all four of these companies have disrupted entire industries, is that there's only two things you have to look for. The first one is you have to look for an industry which is inefficient and a horrible experience for the customers. And the second is that you need to look for an industry where it's costly. Okay, so if you take Uber as an example, catching a taxi before Uber arrived, it was very inefficient and highly frustrating basically, and it was costly. Okay, and that's where it just became absolutely logical. So those are the things you should look for in any industry when one is thinking of whether it's going to be disrupted. Now, I can see there's a whole lot of words here: trust, UX, fintech, innovation, disruption, asset-light technology. They're online, they operate through the net, they're all innovating. That's all right, but in simple terms, they're data companies. Now, let's look at an industry which is inefficient, horrible experience, and costly, and it's property, it's real estate. If you think about buying and selling a house, if you think about managing a property, if you think about investing in commercial property or international property, it's highly inefficient, it's highly frustrating, and it's very expensive and takes a long time. It's an industry which is ripe for disruption. And that's why when we went out last year, about this time last year, we closed with Cedars, and we raised about $2.5 million from 863 investors in 43 different countries, because they understood the message of how can we make global real estate investing available to anyone, anywhere, from any amount, safe and simple. And on this journey, what we allowed people to do is that most people only get to participate in a company once it goes to IPO, a Facebook or an Amazon. Most of us would have loved to have got involved in an Airbnb or an Uber in the private equity stages, but unfortunately it's friends and family, and you just don't get invited. And most of you don't want to be involved in a ranked startup that has no idea what it's doing. You want to be involved in companies that are in the growth phase. And that's what technology now allows people to do, to go up the value chain and to invest and participate in the growth phase of a business, because that's the value cycle, and it gets the most value within a business. Now, this is one of the best tips that I can share with you tonight. And there's a model which you can go and read about on the Harvard Business Review. There's a fantastic book that I would highly recommend called New Power. Now, Richard Branson rated this as the best book of 2018, and I highly, highly recommend that you go and read it. Now, I don't have time tonight to go into all the bases between New Power and Old Power, but what I do think is important is that I took the entire book and I put it down into one model. And what you can basically see is that you've got Old Power model, Old Power values in the bottom left corner. You've got New Power model and New Power values in the top right corner. On the left-hand side, you've got return increasing. At the bottom, you've got short-term risk. On the right-hand side, you've got exponential. And at the top, you've got global and purposeful. Now, if you take an industry, take Encyclopedia Britannica. When that came, we all probably grew up, or a lot of the older people, including me, grew up with Encyclopedia Britannica. When Wikipedia came out, the doctorates and the PhDs and everyone said it's an absolute hypocrisy, and no way near will the information be correct, and it's not right, and they had a whole bunch of reasons. Well, today it's the 8th most visited website in the world. It's by far and away the most accurate information in the world. I don't know anyone in recent years that's been to an Encyclopedia Britannica when you can literally go on Wikipedia. What about Marriott Hotel or Airbnb? We've already discussed them. You've got, you know, Barnes and Noble, a bookstore, or you've got Amazon, a marketplace. And then you've got a traditional property company, and there's nothing wrong with them, just like there was nothing wrong with Encyclopedia Britannica, Marriott, or Barnes and Noble. But the future is about platforms and marketplaces. And while the short-term risk goes from left to right, I believe the long-term risk actually goes from right to left. Because again, you don't play to where the puck is, you play to where the puck is going. Now, I want to share with you some personal stories. So I love rugby. And in 2003, I've been to every Rugby World Cup since 1995. In 2003, I bought 11 friends of mine tickets to go to Australia to watch the Rugby World Cup in Australia. And unfortunately, we bought them on eBay, and I lost £11,000 because I didn't know how to do stuff online. And so I learned pretty quickly about what's called social proofing. So when you buy tickets, you go along, and this thing on the right here, the person's name is called social proofing. And you can see that they've done 974 transactions with 100% positive feedback. Now, I have a better chance of getting a ticket if I buy it from 7104 Leslie, who's done 974 transactions with 100% positive feedback, than I probably have from my brother. Because their digital track record to them is far more important than trying to scam you online. And so that's why, whether you talk about eBay or Alibaba or any one of these other platforms, they've got all these different rating systems: top rated seller, positive feedback, what they consistently do, shipping and track record. You can see all the different badges and all the different feedback. You know, and that's what they call reputation management systems. You know, Alibaba, as an example, has the number of years, they've got the different accreditations, the different number of transactions, the supplier level assessments, etc., etc., etc. And whether it's, you know, eBay, Alibaba, or any of them, they've all got these different rating systems, which we all learn to use, and it makes our life so much easier. So whether we're booking a hotel to go on holiday, and these aren't such great examples right at the moment, booking an airplane ticket, going out for dinner, probably even ordering something online. You know, anything that we do, we use social proofing now to decide whether we can trust it or not. And so when it comes to investing online, why would it not make common sense that reputation management systems are going to be exactly the same? Imagine when people invested, if they knew the number of years that a property or real estate partner had been in business. How many projects have they done on or off the platform? What is their niche focus? How much money were they investing in the deal? What risks are they assuming in the deal? What is their responsiveness to communication? You know, fascinating one. Most property people are terrible at communication. What's their responsiveness? What's the timing of the dividends? What about accuracy of returns? You know, if someone promises you a 6% return, but pays you a 7% return, compared to someone that promises you an 8% return, but pays you a 6% return, you would probably want to invest with the first person the next time, because their accuracy is much more important. Imagine if they had 110 or 120%, you know, actuals compared to their predictive. It would help you make far better investments. And then obviously you've got the investor rankings. What about badge categories? You know, when we do all these things, there's multiple different badges. Now, these are all things that we've designed already and built. And literally all it would take is for us is to have the growth capital to invest in more technology people to be able to turn these into reality. I always talk about due diligence. And what's interesting to me when it comes to due diligence is that, take Wikipedia as a classic example. I don't believe that property is going to due diligence is going to work by a bunch of, you know, men, gray-haired men with 30, 40 years experience sitting in one room, in one building, somewhere in the world. It's old school. It's never going to work like that going forward. It's going to work where property is always going to be localized. Investment opportunities are always going to be localized. You can have a global trusted marketplace and local opportunities with where on Wikipedia, if you and I try to go and write on Wikipedia, none of us can do it. There's only 19 million accredited people around the world that have the right to update Wikipedia. And why would we not have the same ability to accredit people around the world to be able to make educated and informed decisions on investment opportunities and allow people globally to then have local knowledge to make the right decisions. It's coming. You know, whether we do it or someone else, I guarantee you that in the next decade, this will be a reality. What about participation? You know, most people have heard of stockpiles or B-Way, which is a concept out of China. They've got the same out of India. But what about investor circles or investor networks, where you can invest with your friends, you can participate with your friends, you can compete with other groups, and you can ultimately invest in deals, you can win badges, you can communicate, and you know, you can have your investor circles and networks, and ultimately you can gamify the whole experience of investing. So it's not just about investing, but it's about learning and getting results in your investor circles. The other thing that's beautiful about this is that, like most of these type of exercises, is that they create virtuous networks. And what that means is that if one person joins, they go and get 6 friends. That's what happened with Facebook. And then those people go and get 6 friends. And so it grows upon itself in terms of the different ways. And ultimately, it's about building a community. Now, what's so interesting is that this comes out of the book. And you can see here that the old power behaviors was all about getting people. So whether it's investing or property or the stock market, the old power behaviors is all about complying. So it's complying with the rules and consuming. It's basically trying to comply and getting people to consume or invest. That's what it's all about. The new power is different. It's about sharing. It's about affiliating. It's about adapting. It's about funding. It's about people actually being able to participate in the companies that they love. It's about producing. It's about people actually putting up opportunities on the platform. And then finally, it's about shaping. When you consider Wikipedia, there's no owner to Wikipedia. It's a global community of 19 million people that continue to shape the future of Wikipedia. And so when one looks at opportunities, as Peter Diamandis says, you know, he's the guy that put the X Prize in place, which put the first rocket, private rocket into space. And he says the world's biggest problems are the world's biggest opportunities. I'm going to repeat that. The world's biggest problems are the world's biggest opportunities. And so I, as I said to you, had the privilege of going to Singularity University, and they talk about a 10 to the power of 9 impact, which is how do you impact 1 billion people? Now, we've been talking about impact 1 billion people for many, many years, long before we went to Singularity University. And the reason being is that there's about 1 billion people on the planet that have access to property. And one of the first things, and you can go, it's embarrassing, but you can go back and you can see videos I made as far back as 2012, 2013, where I said, we called it Project Double the Wealth. And we were like, well, if there's 1 billion people on the planet that have access to property, why can't we double that in our lifetime? And the whole principle of Singularity University is to solve grand challenges on the planet. But the beauty is we no longer have to be Mother Teresa. We can create tremendous value while solving other people's problems. And then it comes down to exponentials and what's happening with exponentials. It's all about digitizing. It's all about an abundant future. It's all about ultimately people and the convergence. You can see here the convergence of technologies. So what most people are trying to figure out is where's the future, what's happening? But what you really need to do is ask better questions, because it's all about a democratization and a whole bunch of technology, social, economic, and political trends, even for environmental trends that are all converging. And that's where the opportunities are presenting themselves. Peter Diamandis talks about whenever a technology is going to disrupt an industry, it first gets digitized, then it's deceptive, then it's disruptive, finally it's dematerialized, demonetized, and democratized. Now, if you take your cell phone, it's a classic example, because 20 years ago, you had to buy a digital camera, you had to buy a GPS, you had to buy a camera, a torch, a video recorder, etc., etc., etc. Now it's all free on your phone. And that's what dematerialized, demonetized, and democratized means. When you take taxis, firstly with places like Uber, they got digitized, then they became deceptive. Finally, they became disruptive when all the taxi drivers started trying to block the airports around the world. And really what's happened is that just made more of us aware of them. And pretty much all over the world, people now get to use Uber. Well, when it comes to investing, to real estate, and to wealth, we are literally in this early stage here, where it's in some stages in digitization, and it's in very beginnings of deceptive. It's far from disruptive. There's another principle I want to teach you, and this is a guy from Ray Kurzweil. Now, Ray Kurzweil is another guy I had the privilege of learning from face-to-face in the classroom at Singularity University. He's actually the father of artificial intelligence. He runs the artificial intelligence for Google. And what's interesting, over the last 30 years, he's had a higher than 80% accuracy in terms of predicting to the year which technology was actually going to come about in the year. And what I found so interesting learning from him is that the way that he predicts to the year, again, is he looks for long-term trends and he looks for the intersection. So the way he explained it to me was, if you take the mobile phone and you take Siri, what happened with Siri is they said there were three things that were converging. Firstly, people were using, there was massive adoption of smartphones. Secondly, there was artificial intelligence. And thirdly, there was voice recognition. Ultimately, they created Siri and they sold it to Apple for a couple of $100 million within 18 months. So let's look at some trends which to give you some further examples. They talk about the Netscape moment. Now, what the Netscape moment is that you can see over here in 1995, before Netscape came out, there were 16 million people on the internet. They were basically all the tech programmers who knew how to send emails and to talk to each other in techie language. Then Netscape came out, which was a browser. And it basically was like a browser that you all use today, which gave you access to the internet. It made the internet easy and simple and safe for the rest of us. And what that allowed us to do is that today we've got over 4 billion people on the internet, and in the next 5 years, it'll pretty much be everyone on the planet will probably be on the internet. Now, a little company that you might or might not have heard of called Amazon rode that wave. You know, they started at the back end of 1994. They said, right, this trend of internet is going to take place, and we are going to build a marketplace. We're going to sell books to start off with, but our vision is to build an e-commerce marketplace and to ride this trend. And as you might or might not know, last year Amazon was the second company, along with Apple, to become $1 trillion company. It created a vast amount of wealth for people that are shareholders of Amazon. And as a matter of interest, if you invested $10,000 pre-IPO in 1997 in Amazon, today it would be worth $12 million. Now, what's also interesting to me is that if you look at the coronavirus and you look at challenges when it comes to the internet, one of those challenges came about in 2000. Ironically, it was March the 10th, 2000. So this month, 20 years ago, where they had the dot-com boom bust. And you can actually see here on my slides in the green circle that the Amazon share price actually went from $76 to $6 after the IPO. As a matter of interest, if you'd invested $10,000 at that time, at the time of the dot-com bust, today it would be worth $152 million. So sometimes these challenging times not only present difficulty for the majority of people, but they also present opportunity for people that can see and understand long-term trends. So let me give you 8 technology trends that I want to go through tonight. Now, what's interesting is that I've been talking about these trends now for the best part of about 2 years. And whether we take into account coronavirus or not, I, again, don't believe these trends are going to change. All I believe that is going to happen is the coronavirus is going to accelerate these trends. The first one is blockchain and solving trust. The second is artificial intelligence and connecting us with the world's intelligence. The third is big data, algorithms, and quantum computing, helping people make smart investments. The fourth is VR and AR, so virtual reality and augmented reality, which is all about the experience. O2O, which is offline to online or online to offline, connecting the virtual world with the real world. Mobile phone adoption, which I think is self-explanatory. 3D printing. Just by the way, on one of my school groups, I got a message this week saying that they can now print ventilators using 3D equipment. Imagine how that can solve the challenges we've got with coronavirus around the world. And finally, the digital layer, IoT, and bringing it all together. So when we look at it, let's look at blockchain. Now, I want to explain blockchain, and I want to share with you a video here because I think a lot of people don't understand blockchain. Many people say that blockchain is going to have a bigger impact on your life than the internet actually did. And so I would like to just take 2 minutes and play for you this little video because I think it explains blockchain perfectly. And you can see why I think it's so important for you to understand what blockchain is. But just like you don't understand how the internet works, no one says I caught an Uber on the internet, or no one says I bought a book on Amazon on the internet. Like they say I bought a book on Amazon, I caught a lift with Uber. Those companies use the internet, and you don't have to understand how blockchain works. You just have to understand how companies are going to use it. Here it is.
This is the seller. This is the buyer. This is the middleman. Cutting out the middleman can be a great thing, unless you're the middleman. And there are a lot of middlemen or intermediaries out there. Entire industries, such as payments or securities clearing, have evolved to rely on them. Why? Because they establish trust where there is none. They establish ownership, that the seller has the right to sell what's being sold. They attest to history, that there is a clean transaction history. And they certify ability, that the buyer has the money to buy it. All pretty critical details when you don't know the person on the other side of the transaction. Intermediaries know and trust one another. Their business is based on it, so they have more to lose than gain from breaching that trust. But what if there were a better, cheaper middleman? One that didn't add as much cost, complexity, and chance for error? There might be. It's called blockchain, and it has the potential to disrupt the entire ecology of intermediaries. It's a distributed ledger that relies on large networks of computers that redundantly encode transaction data by solving complex mathematical equations. The secure ledger provides an inviolable record. If the history of an instrument is incorruptible and available to all parties, there's no need for a third party to vouch. Blockchain is proof of ownership, history, and ability in non-centralized encrypted form. It's fast, transparent, and free of error. The question is not whether blockchains can cut out the middlemen in complex transactions, but rather which middlemen and when.
So if you're a middleman, it's quite interesting to understand what is going on in blockchain. And if you take real estate as an example, there are 16 different middlemen between the investor and the investment. And imagine being able to cut them all out and do it in a seamless transaction. Now, is it going to take some time? Yes, but it's definitely going to come to these industries in terms of what is actually happening. So, this is from Inc. magazine, and 9 industries which are going to be impacted most by blockchain. I think are actually self-explanatory, because if you take what I said to you earlier about an inefficient, horrible experience and something that's expensive, well, 2 industries like that are the banking industry and the real estate industry, absolutely ripe for disruption in this space. The second major trend is AI, artificial intelligence. Ray Kurzweil says that artificial intelligence will reach human levels by 2029. Follow that out further to say 2045, we will have multiplied the intelligence, the human biological machine intelligence of our civilization 8 billion-fold. Now, if AI scares you, I would recommend that you come online on Thursday night. We've actually got David Orban, who's an expert in exponential technologies, who is going to be part of our webinar, The Global Update, where we'll be asking him about what's happening in cryptocurrency and exponential technologies around the world. He's also based in Italy, so he can give us some, he's a venture capitalist out in New York and lives half his time in New York and Italy, but got marooned in Italy during this whole coronavirus thing. AI is massive, and it's going to have a very big impact. And many of you are already using AI, whether you know it or not, in terms of the different facilities you use that use AI to enable it to happen. The third is big data. So a classic example of this is people want personalized solutions now. We built our investor tests, which there's no way to pass or fail the test. It's all about your information, and then it goes into a system like GIDS, which is a 10-layered multi-algorithmic system to help make the right decisions. And ultimately, it should provide people with the ability to make smart decisions. So the fundamentals of investing, real estate, and wealth don't change. There's a great book by Ray Dalio called Principles. He did this with stock market investing in the early 1980s. Literally in 1980, he started doing it. I highly recommend you read the book called Principles. He did this in the stock market in 1980 and now has the largest hedge fund in the world. It's a $160 billion hedge fund. And I cannot see why this can't happen for other investment strategies, property, and other type of investment vehicles, where you take the data, you put it into the fundamentals, you use algorithms, and it helps people make smart investments. We've got smart TVs, we've got smartphones, we've got smart fridges. Why could we not have smart investment? The data's all there, the tools are all there. It's just about bringing it together. The next one is VR, virtual reality, and augmented reality. Virtual reality is where you put on the goggles and you can kind of go anywhere in the world. Augmented reality is actually the one that's more exciting, and that's where you can use your cell phone and have a real life experience and a digital experience all at the same time. And that's where you got Google Glass. Now, a lot of people have been saying to me, Scott, you're crazy and this is absolutely rubbish. Well, I recommend that you go to Google and you put in a alligator, a tiger, or a lion. And what you will see come up in Wikipedia is view animal in 3D. This was me and my son having fun literally this weekend. We used augmented reality to literally put an alligator in the Neisner Lagoon. My son was standing right next to a tiger, and you can actually see the lion in the room, and you can see it on the phone. Now, when you look at the lion, and if you're from Africa and you've been to the bush, you'll know that that doesn't look a hell of a lot like a lion. So we are very much in the new stage of this. But do you think my son is ever going to get on an airplane and fly overseas to look at a property or an investment? Do you think he's ever going to even get in a car and go and look at a show house? Like, it's never going to happen, when at this age he's already learning how to find alligators, tigers, lions, snakes, eagles in his own house. O2O, online to offline. So what's really interesting is the biggest VC company in the world, SoftBank Vision Fund, which is invested in most of the big companies, Arm, which is Alibaba, and WeWork, Flipchart, Uber, all of them, which is where they've taken companies both from an online experience to an offline experience. Now, WeWork's another classic example. It also had an IPO last year, or an attempted IPO. It didn't go according to plan. But yet in Rosebank, Johannesburg, South Africa, where WeWork has come out to Africa, and they leased an entire building of 5 floors in less than 3 months, and it's 98% occupied. And what I find absolutely interesting is that was the fastest leasing in retail history in Africa, or in commercial space history in Africa. Now, so it's interesting, at an IPO level, it might not have worked. But at a local level, it is definitely solving people's problems. And if I've learned one thing about business, technology is an enabler. People do not invest in stuff because it's an enabler. Companies are great companies because they solve problems. And you need to find companies that are solving people's problems, and the tech is just the enabler. And Roger Hamilton talks about how we've gone from Web 1.0 to Web 2.0 to Web 3.0. Web 1.0 was all about what I said, consumption of reading and online blogging and all that stuff. Web 2.0 became sort of e-commerce and social media. And Web 3.0 is all around social commerce, where it's all coming together. And now it's really, it got the early adopters in 2015. Now it's really starting to get momentum. And like I said to you, I believe that things like Corona are only going to push people up that adoption curve. What's so interesting is that one of the places that the Vision Fund is focusing on is the $228 trillion real estate industry. And whether we like it or not, they're coming to a space near you. The next one is global connectivity, mobile phones, smartphones like this. And what's so interesting to me is that, when I looked at these graphs a year or two ago, they didn't look feasible or plausible. You go to India, you go anywhere in Africa, and it just blows me away. People not only have cell phones, but they have smartphones. People will spend money on data now before they'll spend money on alcohol, or even probably on their kids' school fees, because it's more important to them. And that global connectivity means that there's 4.2 billion new minds coming into the market. Now, we are super excited about that, because we focus on rising middle classes. They are where the opportunity lies. The seventh one is 3D printing. Now, like I mentioned to you already, take what's happened with coronavirus and all the challenges with distribution of logistics around the world. Again, coronavirus is going to increase the adoption curve around 3D printing, and ventilators is a classic example. But let's watch this little video of 3D printing a house, because I think it'll give you a good perspective of what is possible and even how we can create affordability, much more affordability when it comes to housing and property. So you should be able to hear me again. So that's the seventh one, and the last one is the digital layer. They're talking about billions and billions of sensors all over the place, which are linking in. There's a great video at the moment actually on how China is beating the coronavirus. They've got 200 million cameras around China. They literally monitor everything through WeChat. Now, you could say it's complete invasion of your privacy. It is. It's a fact, but it's happening, and it's happening all over the world, where they literally know every single person, who they've talked to, how they're connecting. It's all through sensors, and ultimately the digital layer is bringing everything, all the 7 trends I just spoke about, and bringing it all together to make your life arguably better, depending on how you feel around the invasion of the privacy side of things. So those are the 8 technological trends. The 8 social trends. The first one is social commerce and collaborative investing. This is where people are coming together, they want increasing returns, and they want to reduce the risk. We're tired, all of us are tired of being retail investors where there are a bunch of middlemen, and ultimately, people are earning fees all the way through the process. It dilutes our returns to almost nothing. Classic example is one of the products which is on our platform now called the structured note. I'd never even heard of it a year ago, this time last year. And you've got things where the institutional levels are investing and they're making double-digit returns, and then you and I are getting, if we're lucky, 3, 4, 5% from a bank at a retail level. We're tired of it. And by social commerce, e-commerce, and social media coming together, we now have the power of the institutions to be able to invest at the institutional level. And the interesting thing is you get lower risk with higher returns in that space. And the second thing is the rise of the middle class in emerging markets. So I've already told you 3 or 4 billion people are going to be joining the online community. 3 billion of those are going to be joining that are actually unbanked, and more than 1 billion of them are going to be joining the middle class around the world. And it represents a massive, massive opportunity. The third is globalization. And although there's more and more volatility at local levels, and it's interesting how quickly around the world stock markets have reacted to the coronavirus. More and more people are going to want to diversify across countries, across assets, and across currencies. Blockchain and cryptocurrencies, they've gone through the hype cycle. They're increasing trust, but have the ability to massively reduce friction costs. Social pressure to democratize wealth. I don't see a future for much longer where people are just going to put up with the wealthy are just getting wealthier and wealthier and wealthier at the expense of everyone else. Gamification, it's so interesting. Almost every school kid in the world now is at home and going to have to learn online. And if people think that my 8-year-old's going to sit in front of a computer screen for 7 or 8 hours and just rote learn, it's never going to happen. Gamification is the only way that you're going to entertain people, and by entertaining them, you're going to fundamentally change the education system. Personalization, none of us like to be stuck in a box. Each and every one of us wants to know our personal situation. We don't like just going on TV anymore and seeing all the channels. We like to know, what are the movies we like? What are the books we like to read? If I enjoyed this book, what other books would I enjoy? If I enjoyed this recipe, what other recipes would I enjoy? That's about personalization. And finally, people want to have a purposeful impact on the planet. So when you look at it, social commerce and collaborative investing, there's a link on my LinkedIn profile. You can just go and put in there, LinkedIn, Scott Picken, collaborative investing, it'll come up. And it's a whole long article around how we've changed through the years with production and marketing, commerce, compliance, regulation and trust, and ultimately some of the brands that best represent it. You can see here the local blacksmith, Ford Motor Company, Toyota, Amazon, Alibaba, Facebook, Kickstarter, Uber, Crowdcube, Bitcoin, Ethereum, and companies like Migrate. And really where we've gone is we've gone through a whole value chain where ultimately we're now down to collaborative smart investing, which is where the world is going. Now, collaborative investing is something that kings and queens and monarchs have done for centuries. By using smart technology, you now just allow everyone else to be able to participate in it. And we've really moved into the next phase, which is Wealth 5.0. It came about from Society 5.0, which the Japanese created. I recommend you go and look it up. I don't have time to talk about it tonight. But when it comes to Wealth 5.0, it's all about your impact. What purpose are you having on the planet? What creativity are you bringing? How much value are you creating for others? How much high touch? How many others are you actually impacting? What tech are you using? And finally, what problems are you solving? It all comes down to your solving problems and future-proofing your results in terms of where it's going. So that's the first major trend. The second major trend is the rise of the middle class. We look for three things. We look for population growth, urbanization, and internet adoption. What that basically means is the rise of a middle class. And when you look at the amount of money that's moving around the world, from one country to another, it's still the top 1% of the top 1%. In China, it's still the wealthiest people are moving money from China to invest in American real estate, as an example. We're not interested in them. We're interested in the 800 million people that are on WeChat and the 400 million middle class people that have $10, $20, $50,000 that they want to be able to invest on an annual basis. The fourth one is blockchain and cryptocurrencies. Like I said to you, we've got a great webinar on Thursday evening with David Orban around the future of blockchain and cryptocurrencies. You can see that we've gone through the Gartner hype cycle. 2017, there was huge hype, and then it really crashed, when everyone had bought Bitcoin at $20,000 to the Bitcoin. But what's really interesting is that in blockchain industries, the investment in the industries just continued to grow year on year. And I highly, highly recommend that you understand where this is going and the increase in adoption. And again, remember what I've spoken to you about the adoption cycles and how global challenges, both environmental or I don't know, disease-mental, if that's such a word, I made that up. But with Corona, environmental, political, social, economic, it really pushes people from pain to go and find alternative solutions. The fifth one is socializing and democratizing access to wealth. There's 17 things that were collated by the UN. They actually used social. So people from all over the world voted on it. And the number one that people voted on was no poverty. The number one challenge on this planet is to solve the wealth gap and to have no poverty on the planet. The sixth one is gamification, and I think it's probably goes without saying, but people want instant feedback. They want a better learning environment. They want a preemptive behavioral change. So you want to change people's behaviors, because that's ultimately how you get the results. You want to look at what their needs are. It has a much bigger impact on the bottom line and a better learning experience. And these are all the benefits, and it's going to fundamentally change not just the way we learn to invest, but even down to our children and the way we learn to learn. And personalization, again, I don't think I really need to give you the stats on this, because there's very few people that don't enjoy it when you get an Uber and you arrive at an airport and you've been to that airport before, and it brings up the hotel you caught last time you were at the, at that country or at that city. Or when you go on Netflix and it pulls up a video or a choice, a documentary that you would enjoy. Or you go on Amazon and buy a book and it says this, will probably be a book that you would enjoy. There are all things that we enjoy, and that's personalization. And there's no reason why we shouldn't have it when it comes to investing. And then finally, the power of impact investing. 10 years ago, it was a little bitty, itty thing where a bunch of tree huggers were kind of getting together and trying to change the world. Now, as Richard Branson says, it's not just, good, it's good for business. And, in 2020, it's actually expected to be $1 trillion industry, the whole purposeful, side of things. And, I see a future where we integrate with a company called B1, G1, and imagine if every time someone invested on our platform and invested in, I don't know, a medical deal or a multifamily, and they put a portion of that into a purposeful investment that's going to make a return. So it's not a charity donation, it's actually an investment that's going to have purposeful impact on people's lives. Imagine being able, the feel-good factor of knowing that you're not only getting a profit and looking after yourself, but you're having a purposeful impact on the planet. And that's where I see the world going. And what you basically got is you've got these 8 technological trends and these 8 societal trends, and they're all intersecting. And it's creating no ordinary disruption. Many people believe that this next decade, now from 2020 to 2030, is going to be one of the most pivotal decades in human history. As far back as 1440, when we had the Gutenberg printing press, and reading became accessible to everyone other than just the monarchs and the church, and it had a dramatic impact. When Henry Ford bought out cars and made them available to the middle class, it changed the landscape of America and ultimately the industry and economy of the 20th century and the global cities around the world. And we're going to see the same pivotal change happen in this decade because of these 16 different trends that are intersecting. And you can read all about it on LinkedIn. So I come back to user engagement, and you can now see how I actually started with this back, because people ask me what's the impact of Corona, but it's a logical progress where people have gone from publishing to social media to e-commerce, and now we're coming together with both e-commerce and social media to have social commerce where people work and interact online. Now, when I used to say this a year ago, people used to think I was absolutely crazy. Now, every single one of you is stuck at home, wherever you are in the world, and you have to work with people. You're going to have to, whether you like it or not, are going to have to figure out how to make money online and to add value to other people online. And that is what social commerce is. That is where we're going to be working together and connecting together, investing together, co-working, co-living, co-investing together. And the internet is enabling that, but blockchain will form the foundation upon which trust is built. That's why we created our ecosystem over 6 years ago, 2013 to be exact. And you can see that there's 4 different parts to our business. We've got Migrate, which is where most people already understand. They can invest in international real estate in England, Australia, or America. We've got the WealthE University, where you can go online and you can learn. We've got the Wealth Movement, which is like the TED Talks for wealth, where you can go to live events and you can learn. We had one a couple of weeks ago before the coronavirus. It all gets recorded, and then that actually becomes content within the WealthE University. And then, we haven't launched it yet. I'll talk a little bit about it later. Wealth Create, which is where we see ultimately getting it down to $1 per person per investment. So what we did in our ecosystem is we created the ecosystem where you can see down the bottom here, you can see wealth increasing, you've got Wealth Create, you've got Wealth Migrate, and then you've got the inner circle. On the right hand at the bottom here, you've got knowledge, you've got experience and support. And you can see that what our intention is to help people grow up the value chain. So with gamification, reports and tools, research, online to offline, ultimately online and social networks, experience sharing, simple and smooth, personal support, and ultimately private, like a private banking, private wealth solutions. You can see how it evolves. Now, when you take Wealth Migrate, we've literally taken something which was very difficult to do. To invest in property around the world was extremely difficult, time consuming, a lot of hassles, management, maintenance, massive barriers to entry. We made it easy. You can literally do it in minutes. You can get access to quality partners with quality opportunities. And literally what we're excited about is beta testing from $100, which ultimately allows people around the world to just focus on the best returns. You don't have to go and scour the planet anymore for good partners. We've had everything from medical buildings, residential buildings in London, industrial buildings in Australia, aged care in England. We've had a Big Five game reserve. We've had a Thailand resort, multiple different partners. And you can see the type of cash on cash returns that people have got over the 5 years. 8% cash on cash in America. If you take capital growth into account, you can see higher IRRs. And these are the type of buildings that people have invested in America. Residential whole blocks in England, industrial in Australia, and even development opportunities in South Africa. And so whether you're looking at America, England, Australia, or South Africa, people no longer need to choose. And the model is actually fairly simple. We don't go and find property. We find partners. And those partners are trusted partners. They generally have been in business for 10 years or more. They put their own money into a deal, and they're specifically focused in one niche. They go in, and a good example is Crestwood. This company's been helping people invest in London properties for many, many years, where they renovate the properties, they manage them, or they buy the properties, they renovate, they manage, and they even help people sell the properties. They list the properties on the platform. You and I get access to those properties, and there's 4 simple steps. We can sign up, we select an investment. We're not a financial advisor. We don't give financial advice, but we do give people the information so that they can take control of their lives and make the right choices. They can transact online, and they can manage their global portfolio. So let me take a colleague of mine, Lyndon. Now, Lyndon actually was an investor on our platform before he joined our team. You know, he was an entrepreneur. He wanted something that was easy and simple. He wanted something that was safe. He wanted, you know, he didn't want all the hassle of lawyers and bank accounts, structures, and you know, going and having to set it all up. And if any of you have ever done it overseas, you'll know exactly what I'm talking about. He wanted to be in control and make his own decisions. He wanted to diversify. He wanted variety. He was happy to pay a transaction fee. You know, when you and I catch an Uber, we know that we're paying a transaction fee. We're happy with that. When we use Airbnb, we're happy to pay a transaction fee. But what we're not happy to do is pay an AUM. Now, AUM is assets under management. It's an ongoing fee, which is just charged whether we're making money or not. Now, a good metaphor for this is that in Airbnb, if you rent your house out, they make money only when you make money. So whenever they rent your house out, they take 3% of that as a transaction fee, and the rest you get paid. Imagine if Airbnb charged you a management fee ongoing every month for your house, whether you rented it out or not. Well, I know it sounds ludicrous, but that's the financial industry. They charge you a management fee every single month, whether they're making you money or losing your money, whereas a transactional fee is only when they're actually making you money. You wanted something that was automated and mobile, and you wanted something that was online. So let's go and watch Lyndon actually invest online. You can see it live here. He's logging into the platform, and he's going and he's looking at all the new deals that are on the platform, on the marketplace, and he decides, hang on, just before I go look at these new deals, let me go and look at my portfolio. So you can see here that he's got $64,000 invested. He can go through all his different deals. He can see what's been paid out, what's in his wallet, what the different returns are. He decides, right, I've got nearly $15,000 I want to invest. Let me go and pick a building. So he chose one of the medical buildings in America, and he goes and he reads all about it. He can read the overview, the market summary, the investment summary. He can go and find out who the sponsor is, who the partner, basically, in this case, Allbest, who's done all the due diligence. He can go and look at all the financial numbers in the top right-hand corner. He can see the different risk categories. He can go and read all the documentation and download it. We highlight the risks and we highlight the milestones. He decides it's time to invest in this deal. So he goes through, he chooses the amount of money that he's going to invest, and ultimately it brings up the documentation. He can digitally sign all the documentation online. He can download and read all the agreements, and then it actually digitally signs it. It brings up the payment references. And what you've seen in a little under 2 minutes is Lyndon has actually invested in America. Now, with our digital wallets going live literally in the next week, what's going to be so exciting is that this transaction wouldn't have just been a pledge, but it would have actually taken place through your digital wallets. And so it's really, really exciting in terms of what is happening. And you can see that that the investment's been made online. Now, when we look at our track record, there's no other platform that I'm aware of that has the global distribution of ourselves. We've got members in 133 countries. We've done over $600 million in real estate deals. That's over 10 million rands, put it in perspective. We've had $100 million go through the platform. We've won numerous awards. In fact, we just got nominated on Monday for another top 10 Fintech award here in Africa. We've paid out over $12 million in dividends, and we've got a higher than 70% reinvestment rate, which actually it's sitting at 78% at the moment. We expect that to go up dramatically once we basically see the digital wallets come online. This is what the world map looks like, and so we've got quite a wide distribution. And what's so exciting to me is that when we started, our minimum investment was 100,000. We then got it to 10,000. We've been at 1,000 for quite a long time, and we're about to launch with our digital wallets the $100 option, and we're well on the way to $1. And that's where you can really get global adoption in terms of what's happening. So if I was in a public room right now, I'd expect you to be jumping to your feet and screaming and shouting and going, woohoo, that's flipping amazing, because this digital wallet is truly a game changer for us. And those metrics that I've just shared with you, we believe that they were going to fundamentally change and shift as more and more people around the world will be able to participate. When you look at the competitor landscape, there's lots of platforms that are out there. Every single one of them is local. And the worst thing that I would ever want to do is be able to, if I was catching an Uber, to have to catch a different app in every single different country. And so we decided to start with the end in mind and to build a platform where people could invest with local trusted partners, but to be able to do it all in one place. Our business model was fairly simple. You can see that there's Migrate sitting over here. And on the right-hand side, we built it so that we could partner with all the different types of demand partners. And on the left-hand side, all the different types of partners on the supply side. Now, let's start with the demand partners. I've already explained to you just through our own platform and our own website how people like Lyndon would be able to participate. Here's another example. This lady's been helping people invest in Cyprus and become citizens for the last 10 years. I've known Jenny for a long time. And we basically said to her, well, why don't you add more value to your customers? You've got 10,000 customers. They don't all want to invest in Cyprus. They haven't all moved to Cyprus. Why don't you provide them with more opportunities? So we gave them her and their entire company a completely white labeled solution. She can now log in and provide her clients with a fully Cypriot Realty look and feel. She's got access to properties in England, Australia, America. If for some reason she doesn't like America, I don't know, she hates Donald Trump, she can literally just switch off accessibility to those deals. So she can literally tailor make a solution directly for their clients. Many people have heard of easy equities. It's quite interesting because people in South Africa used to poo-poo easy equities because people could invest from 10 Rand or $1. And it's now the biggest stockbroker in South Africa. It's got over 250,000 clients. They did a survey last year for their clients, and 86% of their clients that invested in the stock market wanted to be able to invest in property. 60% of them wanted to be able to invest offshore. So we went and gave them a presentation how in literally less than 2 hours we could give them easy properties with a full-on globally compliant with a wallet solution and access to properties in England, Australia, and America offshore solution. And this is a work in progress. We can also go into different genres or different verticals. So one of the ones that we're very excited about is women and wealth. And I know Hilda Lunderstedt gets really excited about this along with Megan De Beer around the opportunity. There's such a business opportunity in enabling and empowering women in terms of the future and giving them access not only to financial education, but to financial opportunity. Ultimately, people coming together and investing together, collaborative investing, is actually a feminine energy, and it's really where the world is going. And you could do it as simple as millennials and wealth. In fact, today I was on a meeting in Saudi Arabia, and we were talking about the ability to do Sharia compliant, because you can create all these different verticals. And then lastly, when it comes to demand, why education? We get asked all the time. So coming back to new power and old power, you can see on the left-hand side, you've got adoption, and at the bottom, you've got growth. Well, there's been large adoption to online learning. And I mean, quite frankly, in the last week, and I'm sure in the next couple of weeks, there's going to be even larger adoption to online learning. But when it comes to online investing, there's been large growth, but not large adoption yet. And the reason being is trust. The number one blockage is trust. People want to be able to trust. And so how do you solve trust? Well, you don't leave online and learning and online investing separate. You bring them together, because by marrying together online learning and online investing, that's how you create trust, which will ultimately increase the adoption. And so for us, in terms of building out the global real estate marketplace, we built the invest part. We've got the transactional engine. That's what Wealth Migrate was. We then went and built the Wealth University. And when we did it, a lot of our people and shareholders, investors said, "Oh, you're wasting your time, and why are you being defocused?" What was really interesting is we're not the only one. Grant Cardone is probably the best in the world at the moment. You know, he's raised literally $270 million in a week. And how does he do it? Well, we've gone back and we've reverse engineered everything that he did. And it's all through social media. It's all through digital marketing and education-based marketing online. He's got all these different videos. He's got the books. He's got the courses, both live courses and online courses. He's got small payments and ways for people to get in. And then once they've done that, they ultimately go through and they speak to human beings and they can participate. And that's how he's been able to help people invest. What's fascinating is he only helps Americans in America invest in American deals. We've already reached out to him to provide him with a solution to help global investors to be able to invest in his deals. And what really happened for us was that there was a guy called Neil Milan who came along and he said, "Listen, Scott, the beauty with digital marketing is it's completely predictable. You can test it, you can measure it, you can predict it, and you can scale it." He gave us a whole bunch of tools, including this one here that you can see called Geru. There's another product here which you can actually go into called Market Plan, and you can literally map out the entire customer journey. And with that customer journey, you can then see what the conversions are in terms of the model, and you can literally map out and make this entirely predictable. So where most marketing is 50-50, they often say, you know, 50% of it works and 50% of it doesn't work, and you just don't know which is which 50. Well, ultimately now you can map it out. So these are our customer journeys, which are completely mapped out now. And then you go into Geru, which is the one that I've got on the screen here, and you can literally predict. And what was really interesting is he helped us find what is called a performance marketer. And we actually found a guy from Get Smarter, which is a online education platform, sold for about $120 million. It's going to do about just short of $100 million in revenue this year. A gentleman called Aubrey joined us because he's been in the space for more than 10 years. And it's just so interesting because you can predict and scale. The good news is that we waited for him to join until we had the products. Because what investors don't just want the investment opportunity. They want education, they want community, and they want purpose. And that's why we created the Inner Circle. We've created the eWealth Pack. We've created the investor test. You know, the people can do the investor test. They can find out where they are on the 5 different paradigms. It then goes and tells them what to do and to what steps to take, which courses to do. We've got the online micro degree with the 8 steps to wealth. We've got the Wealth GPS, which is the 10 simple steps through the process. And all of these are completely automated. And the best part about it with regards to the business is that when you invest normally in digital marketing, it can take months, 8, 12 months, to get an investor to come to ultimately invest. And so you need massive pockets of money to be able to do digital marketing. If you've got online digital courses up front, then you can reinvest that money immediately, and it makes the entire business scalable. What we also realized through dealing with Neil, Grant Cardone, and Get Smarter, etc., was that it was critically important to have the human touch. So we've been growing our wealth consultants. You can see here both Fritz, David, and Alex. Many of you have spoken to Megan or Siska, which are human beings. We want to be a digital platform with a human heart. And these are people that can literally hold your hand and help you through the process in terms of, and what this does is it more than doubles the conversion rates in terms of people's participation in actually wanting to get started. And then the final thing that Neil helped us with was that there's so much information, where do I get started? And so we started our starter pack, which ultimately gives people $100 to be able to get started It gives them the inner circle, the eWealth pack, the micro degree, the Wealth GPS, and access to a wealth consultant. And rather than it costing them thousands of dollars, they can literally get started now from $197. And my encouragement to people, I always say to them, if you don't know what to do, just get started. And this gives you $100. And with our digital wallets, it just helps the business go to a completely different level. And it's completely predictable. And the moment something becomes, you can test, measure, and predict it, then it becomes scalable. Another example is a digital demand partner. This company is based out of China called iChang Tao. They've got 2 million customers, 86% women, average age 31. They do everything with digital education up front. They've already given us about 150 clients through our Chinese platform. This year, they're looking to go to 2,000 clients. And these are the type of partners that we're looking to work with. What's also interesting by creating digital products on the front end is that it allows you to revenue share with other partners like Money Revealed, MyWealth, Wealth Chef, and many, many others, which makes the model completely scalable on the demand side. So I think you get an idea of the demand side. On the supply side, there's companies like Infinity. This is a company that specializes in multifamily in America. They primarily go to high net worth individuals and institutions. Another company, Allvest, you've probably heard of before. They help people invest in medical buildings. Again, they only go after high net worths and institutions. And by being able to go to our marketplace, they were able to now put their deals up on our platform where the deals are live, people can participate in the deals, they get the same returns, the same accessibility, but just with far lower amounts of investment. Why do sponsors like that want to come to platforms like ours? They want to build a digital track record, they want global reach, they don't want to be beholden just to a few very wealthy people. They'd rather have much wider distribution because it reduces their risk. And then we've got partners like Zuza in England. This property developer actually had access to deals and to investors. And he said, well, build me a platform. I want it all branded in my colors. I only want my deals on the platform. I'll send my investors to my platform and I'll raise the cash. And so we provided an entire marketplace all in one place. So why I'm showing you all these different opportunities is we've got so many different solutions now to be able to help different partners. The last thing I wanted to mention when it came to supply is that when we did the raise with Cedars, as I said to you, $2.5 million from 863 people in 43 countries, we learned a huge amount about doing a digital launch. And there's actually 14 different steps. And we try and take our suppliers through it because most property people have absolutely no idea on how to do a digital launch. And so we take them through that entire process. And a classic example is a company called CrowdStreet in America. They're only in America. They only help Americans in America invest. But these guys do digital launches. And on their webinar, their record at the moment is $15 million in 1 hour on a webinar. That's where the world is going. And we want to help our suppliers to be able to become part of that world. We've got a thing called our Rockefeller strategy. And I would recommend going and watching a documentary called The Men Who Built America, and how Rockefeller ultimately got to the point where they had 90% of the world's distribution is they did it through mergers, through acquisitions, through strategic partnerships. And so we basically, when we went to China, we went into China in 2016, we invested $1 million there. It took a lot of time, a lot of energy, we made a lot of mistakes. And we finally got it right and got the right team in place from 2017. And you can see here, we've got a fully Mandarin Chinese compliant site. You can see here how the raise totals actually took off from 2017. Last year, more than 40 to 50% of all the raises that were done for Allvest actually came through our Wealth Migrate China, our team in China. And when you look at the equity raises, you can see the multiples year on year, and they're on track this year to really do north of $10 million, etc. What I love most about it is it's just completely scalable out of China with hundreds of millions of middle-class people wanting the same thing, which is to invest in good quality assets with a good quality return. And then when we went to India, we said, well, why try and do it all ourselves? We've got a great partner on the ground. We met him through Cedars, a guy called Rohan Malhotra. He invested through Cedars, and he took us to India. He introduced us to people on the ground, And what we decided was, rather than try and do everything ourselves, why not try and partner with companies? There's a company called Property Share in India. They do Indian properties for Indians in India. And we said, well, why don't we help international investors invest in your deals? Why don't we help your investors invest in international deals? So that's on the supply side. Another company he introduced us to on the demand side is a company called Cheerios. At the time, they had 15 million ladies, entrepreneurs, and they were looking to create Cheerios wealth, and we could literally create them with a white label solution. So these are all things which are work in progress. I wanted to share with you a case study of Gavin Rousseau. Now, Gavin is a professional cyclist. He was actually SA champ 3 times. He worked for a company called Aprio, and basically what Aprio did was it did interbank transfers, and it was an online marketplace that did $13 trillion per year. But what we realized when Gavin joined our team was that he was a tech team builder, and he built us a book building system. We thought we were building a system to help people just invest in property, but it was a book building system. And really why he joined us was he loved the idea of being able to invest in New York from $1,000. So he joined as our CTO. He built an incredibly good tech team and is now actually evolved into our COO, helping to run the entire business. And what is a book building system? Well, there's 5 components to it. You've got supply, you've got demand, you've got compliance, you've got operations, and you've got digital. And what we've done with the book building system is bring it all together. A classic example is one of our partners, Cashbox. They were doing structured notes. They came along to us and said, look, we've got a product. We only deal with high net worth investors. And we provided them with the compliance, the operations, and the digital platform. We built them a white label solution. We've actually created an alternative investment platform, and we put it on our marketplace. So although we've got a solution for property, we've also got an alternative investment platform, which allows us to apply this to many other products within the wealth space. So whether you're an educator, a property educator like Real Estate Investor Magazine, an estate agent, a financial planner, an asset manager, an investment bank, or even a platform, we can actually help you. And Ken Williams, our head of strategic finance, has actually created a whole way to create a win-win strategy for our strategic partners, so that not only can they create value for the company, but they can create value for themselves at the same time. And our big picture, our moonshot is within Wealth Create. We always knew in the beginning that we were going to go after higher net worth individuals that were investing more money. With time, we would go to the middle class, and ultimately we wanted to reach everyone. And that's where Wealth Create, comes to the table. We want to make investing as simple as a swipe of a finger, and we ultimately want to get it down to $1. And I always say to people, $1 won't change your lives, but it'll change your habits. And if we can change your habits, we'll change your financial destiny. And that's what the wealth movement is all about. It's how can we make a better and more sustainable planet for all. The top 1% just continues to get wealthier and wealthier every single year. And it's because they invest in better quality assets. While the 99% of running around worrying about the stock market crashing and coronavirus, the top 1% are literally investing in good quality assets right now and creating even more wealth. Where you're born in the world has a dramatic impact on your wealth. Whether you're a male or a female has a dramatic impact on your wealth, and whether you're a millennial or were born in the wrong time has a dramatic impact. When it comes to real estate, we're stuck in country. It's very difficult to get into commercial or international property, and the stats are horrific in terms of the number of us that actually retire wealthy at the age of 65. It's less than 1% of people, and so we decided to use technology to help the 99% to be able to invest like the top 1%. And our social promise was to create a world where all people are literate, a world where education is par for course, a world where women are treated as equal, a world where all people have access to quality investments. Imagine a world where 6 people on the planet who currently live in poverty can live a better life. Imagine that world. At the Wealth Movement, we're aiming to create that world. I ask you to imagine, if we can imagine an Amazon, why could there not be an Amazon of global real estate that is simple, safe, and easy for people to use? When you look at long-term trends, back in 1980, even before 1980, in 1965, the average share was actually held for 7 years on the stock market. It was impossible for people to invest if you lived in China in the New York Stock Exchange. And then, you know, what happened was, you know, today shares actually change every 22 seconds. And what happened is a company called E-Trade came along in 1980. They digitized the stock markets. They allowed accessibility. There's companies in South Africa called Easy Equities that, and many others all over the world, Robinhood, etc., that have made it easy for people to access the stock market. And it created one of the biggest wealth transfers over the last 40 years. This company is worth $14 billion in terms of the whole process. When it comes to property, the average house in America is owned for 8.6 years at the moment. And whether it's Migrate or other platforms, I guarantee you that I don't think it'll take 40 years for technology to disrupt this space. And that's why I say to people, imagine the Amazon of global real estate. Or maybe we need a bigger moonshot. Maybe it should be the Amazon of personal wealth. You know, we've built a team of people around the world. We've got both a balance of technology, property, and investment people to make this vision a reality. We've looked at the financials, and you can actually go and see the financials. They're all on the Seeders campaign. Our latest financials have actually come out. I'm not going to share these with you tonight because we've got a shareholder update on Thursday, and only after the shareholder update will they be public for everyone else. But some of the key highlights is that our revenue for the last 12 months is up at 28%. Our costs are down 55%. There's been a dramatic reduction in operating loss over the last 3 years, and we're well on our way this year to break even. We've got 5 new revenue streams that have come about in the last 12 months, and we've also got 2 new uncaptured revenue forecasts which are coming through. So these are all things which can be explained in more detail, you know, should someone want to. In simple terms, when it comes to the business, there's 3 metrics which are important: the number of transactions, the average fees, and the average transaction size. Now, for us, we're aiming to make $100 million in revenue, which would make us $1 billion company. To do that, we need to increase the number of transactions, decrease the average transaction size. And in 1 calendar year, we're aiming for 1 million transactions with an average fee of 5% and an average transaction size of $2,000, which is $100 million in revenue, or $1 billion revenue, $1 billion company. And obviously that has an impact with regards to the share values. And as I said to you, you can actually see that in terms of what we put together for Seeders. In terms of exit strategies, there's 4 exit strategies. The first is we built in an annual liquidity event. We have not had one of those yet. We have copied Airbnb, Uber, Tesla, SpaceX. It's all in the shareholders agreement. And the intention would be ultimately to create a liquidity event on an annual basis where early investors and or staff members or whatever would be able to get liquidity. The second is a strategic sale where you sell to a social media platform, a bank, a real estate investment trust, or an investment firm, someone that wants access to clients. The third is a dual listing between the London Stock Exchange and the Hong Kong Stock Exchange, which is what Ken and I have ultimately got in our sites, which is why we've got 2 holding companies out of those 2 places. And the fourth one, if you want to get a bit esoterical, is possibly a tokenization of the business with a 5 to 7 year window frame. You know, in 2014, we copied Salesforce. And what they did back in 1999, Salesforce is the biggest, one of the most successful CRM, which is customer relationship management systems in the world. Back in 1999, he went to all the banks and the investment gurus and the venture capitalists and said, I'm going to put your people's data in the cloud. And they said it's never going to happen. So he went to his clients and he said to his clients, why don't you invest in the company? You believe in it. Well, today it's the 14th biggest technology company in the world. It's worth $50 billion. And we thought it was a brilliant model, not only because he got the investment, he got his clients buy-in and ultimately created a community of people that wanted to succeed. And so we launched our Wealth Partners back in 2014. We see it as a group of empowered people that there's 6 different parts to the business. We've got business, we've got real estate, we've got technology, we've got investors, we've got the vision and mission, and we've got exponential understanding. And really for me, there's 3 reasons why people become a wealth partner. The first is they want to make a profit. The second is they want to be part of a like-minded group of people where they can grow and learn together. And for me, this has been one of the most magnificent values that I never expected to get by being around a global like-minded community. And the third is we want to have a purposeful impact on the planet. And you know, I always say to people, if that doesn't resonate with you, then becoming a wealth partner is not for you. You know, a wealth partner for us is a shareholder in the business. But if making a profit, if being with a group of like-minded people around the world to grow and learn together and invest together is something that appeals to you, you know, to ultimately become a global citizen. And the third is to have a purposeful impact, then this is something you should look at. We asked our shareholders for one word, and I think it'll probably be better if I share this video here for where we just shared, and I probably won't share the whole thing, but just for one word of what it meant to them to be a wealth partner. And if you're considering being a wealth partner, then this is certainly a video to watch.
Inspired.
Freedom.
Abundance.
Credibility.
Enlightened.
Impactful.
Unimaginable.
Peace of mind.
Phenomenal.
Total honesty.
Reliable.
Genius.
Engaged.
Excited.
Hopeful.
Exponential.
Empowered.
Connected. Dream. Innovative.
Global diversity.
Opportunity.
Freedom. Change.
Excited.
Ukamuso. Blessed. Empowered.
Incredible. Privileged.
Revolutionary. Super. Disruptive.
Support.
Change.
Empowering.
Excited. Interesting.
Evolving.
Global.
Opportunity.
Buzzing.
Powerful. Fortunate.
It's possible.
Work. Community. Inkululeko. Proud.
Transformative.
Fiddle.
Inclusive.
Satisfaction.
Trust.
I think you get the point. And if you want to share that whole video, I'm sure Lee can put the link in the box for you. I'm conscious of people's time, and again, to remind you, what is a wealth partner? Well, it's going up the value chain. It's not waiting till a company IPOs and you buy shares in Facebook or Amazon. It's not waiting till Uber or Airbnb, you know, the private equity phase. It's actually getting involved at the growth phase of a business. It's far from a startup, and it's getting involved in the growth phase and the scale-up phase of that business. That's why we did it with Cedars. You can actually go to Cedars. It's live on Cedars. Now, this was a fully authorized raise, which was done, you know, it's authorized by the FCA in England. We raised, as I said to you, you can see there, nearly £2 million, $2.5 million from the investors. You can see when it was raised and everything else. Everything's here, the idea, the market, the team, the updates, the investors, everything is basically there that you can go and read all about it. And what's interesting for us is that I've already given you the numbers. What we have looked at, though, we had one group of investors that were investing in a development in Brisbane for $400,000. We did make an opportunity available to people at the end of last year to be able to participate at the same value because that deal has not, the capital has not been released, and so people were not able to participate. People took up that opportunity, and what you looked at is that when people invested in Cedars, the share value, according to external valuation, was $1.61. We actually gave them a discounted value of $1.50. And the reason being is that they were bringing it all together, and it was coming in as one institutional investor. Ken and myself and the team are actually working on, we've only just got all the latest financials. We're working on all the financial projections. We're getting external valuations as well. And currently, the share value is looking at anywhere from $2.06 to $2.70. We need to finalize that over the next couple of days. Like we said, we've got a shareholder update on Thursday. And the opportunity which presents itself is that we had one investor of that 400 that actually committed 250. They were coming in as a platinum investor. They were releasing their capital and have not been able to come to the table. With regards to ourselves, you know, we've got quite a lot of pressure on us from Cedars and other investors to close out this round now at that value and to redo the value for obvious reasons based on what we've just said. And so the opportunity is that we've agreed to release it at $1.61, so the exact same value as what we did with Cedars, which is about 25% discount on the current valuation numbers. And we can't do it, you know, the total amount is $250,000. We can't do more than that. So it would have to be on a first come, first served basis. We've always allowed people to participate. So if people want to come in, the minimum is $10,000, and they would get it at $1.61. If they come in on the gold, that's silver. If they come in on the gold level, the minimum is $25,000. For those people, you know, I acknowledge at the moment that the rand has slid, you know, dramatically in the last 2-3 weeks. We will honor 15 rand to the dollar, so we'll fix the exchange rate at 15 rand to the dollar. So whatever the rand value is at 15 rand to the dollar. And what's also interesting is that at a gold level and above, you become a legacy investor, which means you pay no fees on the platform for the rest of your life. And then a platinum investor is someone, you know, one person that would take down the entire 250, and they basically would get it at $1.50, so exactly the same as Cedars. We would also, if it was a South African, we would, you know, we would fix it at the rand rate. They would be a legacy, and it would be Class A. So I would highly recommend that if you are interested, let us know, and as a team we can reach out. Once we do the shareholder update, we will then run through with the shareholders all the latest numbers and the value. And once we've got that, we will need to go to an entire new round where we will actually look to participate and you know, increase the value and the share price, etc. So we wanted to provide a unique opportunity. It's a small opportunity, it's not a lot of money, but we need to close out this round. It's a little bit irritating, I'm not going to lie, because you know, it was closed out with Kensington, then it was closed out at the end of last year, but we really got some pressure now just to get it done, so we can close it out and then move on to the next round. That's frustrating for us, but it presents an opportunity for people that believe in the future. And just like I showed you with Amazon, you know, sometimes other people's tough times create opportunity for investors in terms of where we're at. So I put up a poll. If you are interested, you know, just put in there yes. If you're not interested, say no. If you want more information, just ask for more information. You know, I think what is also interesting is that I'd be interested just to know what level you would be interested in, whether it's a silver, a gold, or a platinum. It's not a firm commitment. It just gives an indication, so that we as a team can add, you know, a lot more value to you and make sure that we are reaching out to you, reminding you that a silver will be at $1. It's a minimum investment of $10,000, and the share price will be $1.61, so exactly the same valuation as when we did it with Cedars 15 months ago. The gold will actually be at $1.61, but you can actually hedge 15 rand to the dollar, and on top of that, you'd become a legacy investor and pay no fees going forward. And then a platinum is the same as where it's consolidated at a you know, like a Cedars basically. So if you would just go online quickly and let me know what you're thinking. I'm going to give you another 10 seconds. I want to share with you a story which I think epitomizes everything that we try and do. If you just want to go online and fill in your vote there, even if you're not interested, you know, it doesn't bother me. I just, you know, this is not for everybody. Like I said to you right in the beginning, there was the third investor of Apple, and you know, he decided it wasn't for him. If it's not for you, that there's no harm with that, you know, in terms of that process. So I wanted to share with you the story, and the story is of a young man called Bongi. In 2015, we basically, one of the programs we were doing was empowering children with entrepreneurship education, and he was running a lemonade day stand. He said to us he had a dream of going to a private school. This was him when he was 15. His mother is a police lady. His dad is a security guard who's no longer with him. And with our community, we actually went out and we crowdfunded the ability for him to go to a private school. This year, he's actually in matric. He's captain of his hockey school of the first team. He's captain of the provincial team. He wants to go and become go to university, become an entrepreneur next year. But the thing I found most fascinating was that over the Christmas period, while most children were having a holiday, he worked 6 days a week on the boats, cleaning the boats, etc., etc. And by the end of the holidays, he came to me and said, Scott, I made 1,500 Rand, which is about $100. And he said, how do I invest on the platform? And what brings goose pimples to me and tears to my eyes is that, you know, people like him now have the ability to participate. You know, for people that are shareholders in this company, for people that invest through the platform, we are facilitating and helping people like Bongi. And if we can help one Bongi, imagine what is possible on this planet, of not only the profit of being able to help people solve their problems, but the purposeful impact you can have in your lifetime. And so I leave you with a thought, and that is that this is my wife and son. He at a very young age is learning that to own green hotels and red houses and earn a passive income is what we call smart investing. He's actually been investing on our platform for more than 2 years. If you've got children, I highly recommend they get started. It's what we call smart investing. His dad, with an incredible dream, and an incredible team, has turned the dream of monopoly into a global reality and is now diversified across 4 different continents, both residential and commercial. It's what we call smart investing. You know, the wealthiest people in the world, they believe in generational wealth. It's what we call smart investing. And our invitation is for you to come on a journey with us and help us make smart investing available to everyone, and to put smart investing in every single person's pocket. And so I hope you enjoyed tonight. You know, this is the slides with some of the contact details. If you're interested in getting started with the starter pack, you know, go and sign up for someone else. You can literally start investing from $100 on the platform. You know, if you just want to go to the platform and learn all about it, you've got the platform details. If you're interested in talking to Lee, she's head of our community. If you're interested in being a shareholder in the company, you know, then let us know what you want to do next. I'll put the last poll up, which is, you know, please contact me so that I can become a shareholder. It is done offline, and that's why, unfortunately, the minimum investment is $10,000, because it's quite time consuming. It's not for everyone, and we need to make sure that people can qualify first. You know, I need more information. I want to speak to someone. I'm not interested. That's perfectly fine. This is not for everybody. As I said to you, this is only for people that really focus on 3 things. They want to make a profit. They want to be part of a global, like-minded community of people that want to grow, learn, and invest together to become global citizens. And they want to have a purposeful impact on the planet. Those are the 3 endearing reasons why people become a wealth partner and a shareholder of this company. And then lastly, I want to become a strategic partner. You might be an estate agent, you might be a property partner, you might be an asset manager or a bank. And, you know, we're always looking for strategic partners so that we can grow the business and, you know, and add value to you. And by adding value to you, we can add value to more people around the world. You know, we built the entire business on Zig Ziglar's principle, and that is that you can have anything you want in life if you help enough other people get what they want. And so, you know, our whole analogy is, how can we help more people get what they want? And in these times of coronavirus and fear mongering and you know, all this stuff that is happening around the world, you know, my request and certainly what I believe is that as leaders, we need to step up. We need to inspire people. We need to show them what's possible. We need to focus on what the fundamentals are. I remind you of that graph where people always focus on the worst case scenario in a time of crisis. And yet it's our responsibility as leaders to actually look at the overall trends and where they're going. And what I've tried to do tonight, and what our team has tried to do, is share with you these 8 macroeconomic trends, these 8 macro technology trends, and they're all intersecting. And at that intersection point, which is this decade, it creates an opportunity for generational wealth. And, you know, it's a generational opportunity. And I invite those of you who are interested to be part of it. Those of you who aren't, I hope that we've added value to you just with the education. So Lee, that's all from me. I need to have a sip of water, and then maybe we can answer if there's any questions that anyone needs to know.
Thanks, Scott. That was an absolutely amazing webinar, lots of information. So thank you very much for sharing. We do have a couple of questions.
Okay, I've got them all in front of me. I don't know if you want me to just read through them and fire or how you want me to do it. For people that are saying the sound is poor or that they couldn't see the video, etc., we did record the entire thing. So I know that a lot of people are battling with internet at the moment because suddenly everyone's at home. They've got children doing online learning and everything else. So anyway, hopefully it wasn't for everybody. As on board with your cause as possible, creating the new wave of entrepreneurs regardless of age, with our property business as a springboard that profits as it grows its stakeholders. Thank you to all. Thank you very much, Jay. And I think one of the things that I love about Airbnb, probably more so Airbnb than Uber, but Airbnb helps people make money while they're sleeping. And it's basically a business within a business. And you know, I dream of a day when through the marketplace, Amazon does exactly the same thing, where our marketplace is helping people create a business within a business, where they're helping other people, and by doing that, they're helping themselves, and you know, and ultimately, you know, taking steps to solving one of the greatest challenges on the planet. I understand the fears for diversification now when it's rooted in the realities of the virus. Investors need to get clear with themselves as to which is more true, the likelihood of losing resources or the possibility of coming into contact with the virus. So I hear you, Jay. I'm not really sure on what context. You can see a bunch of people talking about Amazon and all that. Let me see. Minimum start. Oh, what just happened there? Tony said the minimum startup is too risky. Minimum startup cost too risk and reward. So you know, I think that's the whole point, Tony. Is that, I mean, you and I were flying over to America 7 years ago now to buy properties, and it was a hell of a time consuming. We had to set up LLCs, set up bank accounts, meet lawyers. It cost a lot of money. You know, what took us weeks, months, in some cases years for people, people can now do in minutes. You know. Samir asked, what's the name of the book? You've got New Power. It was the one book I spoke of. The other one was Principles. I think they were the main two books I spoke about. Will there be a recording? Yes. So there will be a recording. We will share it with people. We will be more open to 3D homes of our properties, 100%. What's really interesting, there's a partner of ours in Australia, Richard Dunn, and on this weekend, you know, while most estate agents are sitting at home feeling sorry for themselves, this one guy went online, did his first webinar, went to 3 people's houses, took videos of them, did a webinar, and actually sold 3 properties online. First time he's ever done it. So sometimes, you know, necessity creates opportunity as well.
Scott,
according to your model. Yes?
Sorry, there's a question from a few people just saying to please re-show the slide of the wealth partner options. So while we're going through Q&A, maybe you just want to bring that up.
No problem. There, that's the one. Oh, hang on. My computer's going too slowly. There are. You should be able to see it now.
Yep, that's perfect. Great. Thank you.
Okay, according to your model, would like to explore how our company could be part of the opportunity pool. Perfect, Jay. Please reach out to me or Lee or any one of the wealth consultants. We're always looking for strategic partners as to how we can, you know, add value to you, to your clients, and you know, particularly as we go online. It's so interesting. You know, so many estate agents and asset managers and financial planners and everything. We're like, oh, I don't need to. I go see my clients face to face. Now they're sitting at home. And they're like, oh, how can I help my clients? How can I add value? How can I, you know, add extra income streams? And we can now help you do it. And, you know, with a, I'm not allowed to mention the name, but just let's say the biggest private bank in Africa and England, you know, we basically created a white label solution for them in less than 2 hours. So it's really an opportunity now. Education is a major factor at all levels to both continue profits and assist those involved in getting to the next level, regardless of where they start. Completely agree, and that's why for us it's such a critical part, no matter where you are on the journey. Does Migrate have an app? for smaller investments that users can control, from rounding off purchases, dollars, to adding more? So the answer is no. I wish we did. Our platform is mobile responsive, so you can do everything off your mobile phone. Particularly as we bring down the minimum investments, one of the real focuses will be on creating an app, because obviously that target market will be more and more only using their phone. But you are right. What are my options as an investor living in the United States? Good question, Sean. I suggest we chat offline. Obviously, within the United States, there are things, for being an accredited investor, etc. So I would need to just understand that. But what I'd suggest is, if you want to reach out to me on my mobile phone, I will actually just send a message, or Lee, if you could just send a message to Sean with my mobile phone. Let's chat. I know you're in the States, but I hope you have WhatsApp. We can always, there's always a way. I'm a big believer, wherever there's a will, there's a way. Love how you finding opportunities globally that fit your model, which will ultimately have you ahead of the curve. Yeah, trying to. And again, people that have been on this webinar, if you enjoyed it, you enjoy what we're doing, please put us in contact with good partners. We're always looking for good property partners. We're always looking for, people with track records, etc. The more quality, trusted partners we can have on the platform, both on supply and demand, the more we can grow the marketplace. Will there be a replay? Yes. Will this webinar be downloaded? Yes. How does one become a shareholder? So I hope I explained that to you, but in simple terms, just reach out to one of the wealth consultants, myself or Lee, and we're happy to talk you through it. Has this been found to be an obstacle? Is the app being considered, or is it working okay? So yes, the app, we basically got what's called we've got a technology stack, and then we've got, what do we call it, Lee? A parking lot. I always hate the bloody word, but no, it's not called that. It's the tech, it's basically a priority list. And so it's on that, and we are working through the priority list. And obviously, the most important thing for us at the moment has been to get the digital wallets live, which, I'm not allowed to tell anyone, but let's just say they might be coming in the very near future.
You are the worst person to tell a secret to. The worst person.
No, my 8-year-old son's the worst person, but between me and him, we're pretty good. Judette said, have I studied with Neil? I haven't studied with Neil. Neil and I have known each other for a long time. So we actually got businesses together, and we collaborated and worked together. But I've learned a lot from Neil. Yeah, I'm very grateful to consider him a good business friend. Please re-show the previous slide. So hopefully I've done that. Can my SA Family Trust become a shareholder? A good question, actually. I'm not sure on that. I know Lee, I'm not sure if you can answer that. I can't actually remember. I know that a trust does cause challenges, but because of our structure, you can own it with offshore. You can own it with different structures. I actually just can't remember if a South African trust can own it.
Yeah, I'm going to have to check up on that for you, Adele. I'm sorry, I can't answer that. I know in relation to investing in offshore property, but not to investing in the company. Sorry. I will get back to you tomorrow with that answer.
Okay. Andre, Lee said that she'll get back to you directly. Yeah, so in terms of investing in property at the moment, it's interesting. Real estate is not going down, actually. Depending on which sector you're looking at. As an example, we do medical buildings in America. It's not going down. In fact, there's more capital going into America looking to buy medical, and even in Corona times, people need doctors more than anything. Aged care in England, multifamily in America, industrial warehousing, for e-commerce. So it's about sectors. I think if you're in, I'm very glad we're not in offices. I'm very glad we're not in retail. Because those sectors, I think, are going to be hard hit. But yeah, I think you need to be careful of which sector. I also think you need to be careful of making blanket decisions. The whole of America is not a good place. The whole of South Africa is not a good place. The whole of England is not a good place. The whole of Australia is not a good place. Equally, the whole of them are not bad places, and the whole of property is not a bad place. There's a huge amount of capital right now leaving stock markets and going into safe asset classes with predictable income. And that's, if you've heard me do any presentations for years, I've been saying focus on stable income, quality assets, things that you understand as well, like you can literally go and explain to your mother what they are. And good quality property is a good example of that. Okay, for us in the US, I still believe we must deal with Orbist and not with you. So Cheryl, let's chat that through, and we can talk about how to do that. Obviously, with the digital wallets and everything coming, we can look at it. You must be on Ray Dalio's radar. I wish. I hope so. I think his book is amazing. I had the privilege of meeting Jim Rogers, who's the investment biker, and the two people I like to take the most investment advice from are Jim Rogers and Ray Dalio. So yeah, really interesting. So Mark, yeah, I mean, you've got the slides there in terms of the breakdown. We basically wanted to make it affordable from a Rand perspective, because our Rand costs have not spiked. 60% of our overheads or our cost base is based in Rands, and therefore, it's why we're able to offer the discount, because it's an arbitrage really on what's happening with the Rand. Ian's asked, who is the major competitor in the space and how would they influence market share if so? So Ian, there are competitors. I showed some of them tonight: Fundrise, Realty Mogul, CrowdStreet in America. In England, you've got Property Partners. Not in Australia, in Singapore, there's what's the name? Anyway, there's a whole bunch of them. None of them are international. Not one of them have global compliance, and not one of them have a global wallet solution. So we don't see them as a competitor. We see them as a potential partner and being able to actually interact with them. We built our platform in a modular way so that we can literally interact with them and provide them with global solutions. So rather than competing with people, it's about collaboration. Really, in terms of the major competitors, I would actually say it's more the traditional financial industry, the traditional REITs, and how long they will think that the world is going to continue in the same way versus the adoption of what I've shown you in terms of online investing. And whether we can work with them or whether they'll work against us, time will tell. Mark's asked about legacy investors and why they don't get waived the fees. I think, Mark, I need Lee to check that up for you directly. There was a threshold for legacy investors in terms of, yeah. Judette said, please don't answer this question now, I have to go. Okay, not sure what the question was. So anyway, Judette, reach out to us. Ian said, suppose the geographic diversity drives the current competitive advantage. Yeah, I think the two major things are technology is one thing. The two major hurdles are global compliance. The second one is global wallets. I mean, both of those have taken us years, not months, years. And the third one, which is probably as important, is that for 20 years, I've been investing on 4 different continents. It's very easy for an American to say, I'm going to go suddenly invest in England. It's a lot more difficult to actually do it and to have, an understanding of the market and how to find partners and everything else. Thank you, Cheryl, for your kind words. Judette about Neil. Will this become available 8th of the 4th at reduced minimum? I'm not sure what that means. What is this opportunity called? So it's the opportunity, I mean, basically in simple terms, it's to become a wealth partner. It's our internal language for being a shareholder in the company. I mentioned Wealth Migrate on a regular basis in conversations. Thank you very much. I actually think we've all got a collective responsibility to share with the world that there's a better, not saying we are a better way, but people investing online together is a better way, because we reduce the risk and we increase the returns that people get. What are the fees for a 10K investment? I see what you mean. So no, that's just the traditional, so there are no fees for the 10K investment, and then it would just be, as usual, being a shareholder in the platform and investing on the platform. And just every time you invest, you'll see exactly what the transaction fees are, and never more than 3%. It works exactly the same as Airbnb, and that's the same for everybody worldwide. All that we've done is we've created a threshold for legacy investors where we've just reduced those fees or taken them away completely for our top shareholders. If I take platinum, is it possible to down pay it? Yes and no. It depends. It depends what timescales we look at. The reason being is that it obviously involves other people. There's opportunity costs, and it's just about being fair to all the shareholders and to everybody, basically. Lee, Scott spent the past few days with his son. So that's about me. To be honest, I'm so excited about the digital wallets. It's more like being like an 8-year-old being told you're not allowed to talk about Christmas. Would you be interested in AI tech? Send me your contact details, we'll provide. So Rohan, yes, definitely, always looking for the right partners. I've shown you tonight some of the different trends, and one of the things that I see for us is that we're a puzzle maker. We don't have to make all the pieces, but we bring the different pieces together to architect the puzzle. Diane said, I want to talk to you directly. Where can I call and get full details? So Diane, no problem. I don't know if Lee or someone can give you the details. My details did come up on the slide. I will share them at the end again. Probably everyone's had enough time to look at the slides. So I'll go back to the slide I was on. This is the slide with Lee's details. You can see all of Lee's details, and then this is the slide with my details. If you send me an email, there's probably a better chance of you sending a courier pigeon. So please rather WhatsApp me, just because I get far too many. Rohan, perfect. I look forward to hearing from you. Is the share price for a gold investor also set at 161? Yes, Adele, it's 161, and with the rand being hedged at 15 rand. I thank Sean for the kind words. Cheryl, I'm hooked up with Alex. What does it say here? And we'll get on with the steps. All the best. Thank you very much, Cheryl. What are the fees of the silver level? So like I said before, there are no fees to become a wealth partner. And going forward, it's the same as anyone investing on the platform. There's a transactional fee, which is never more than 3%, and is shown to you transparently before you invest in every deal. So exactly the same as an Airbnb or an Uber. So please explain the legacy no investor. So what we did for our shareholders that had been with us for invested large amounts of money and been with us, we basically said they can invest in deals on the platform and have no fees. So we call them legacy investors. And what we've allowed people to do is if they reach that threshold as a shareholder, then they join the same group of people. Rachel said, I look forward to talking to someone in due course. I've sent my request for a chat. So thanks very much, Rachel. And Lee, that's everything from my side. We've got the webinar on Thursday for our shareholders, where Ken Williams and myself will be running through the financials and the full CEO letter. Once we've publicly been through that with our shareholders, or sorry, privately been through it with our shareholders, we'll be able to share it publicly. And then on Thursday night, we've got the webinar where we're interviewing David Orban, who's an expert in cryptocurrency and in exponential technologies. Just by the way, David is an advisor to the board. He's a venture capitalist out of New York, and he's also a shareholder. He's also invested in the company. We've got Ken Williams, who's an investment banker out of London, been an investment banker for over 25 years. Will be giving us his updates on what he thinks is happening in global stock markets and the investment space. We've got James Painter, who actually wrote chapter 2 of my book. I've known him for more than a decade, and him and his son Alex specialize in currencies and forecasting of currencies and other commodities. They use a thing called the Elliott wave curve. It's amazing. I've never really understood it, other than to say it's a bit like the weatherman, and they spot patterns. And just like 100 years ago, we had no idea if it was going to rain or snow tomorrow. now, with the way the weatherman spots patterns and can tell us whether it's going to be sunny or snowy tomorrow. They do the same thing in predicting currencies, and have had an incredibly accuracy over the last 10 years that I've been following them. And then we've got myself, we've got Brendan Brown, who does multifamily in America. We've got Alex Impey out of England doing UK property. And I'm trying to persuade Richard Dunn out of Australia to wake up. But if he doesn't, I'm pretty close to him, and we'll make sure I've got an update on what's happening in the Aussie market as well, so that we can really do a global update. It won't be a presentation, it'll be a Q&A. And so come along if you're interested in the market and what is happening. Mohammed, thanks for the kind words with regards to this webinar. I hope it added value. Did the date for the webinar not change to the 8th of April? That's another webinar, Adele, for next week. This webinar, the global update, is for Thursday night. It's the 2nd of April. Gwen has said, thank you, exciting, appreciate it. And Jay said, Ray Dalio's text community. Okay, I'll save that number. See if I can try and get into. I love. Ironically, Jay, I do my goals every year, and one of my goals this year, I added Jeff Bezos from Amazon and Ray Dalio, because they're two people I would love to meet personally. Lee, I've officially nearly lost my voice. This is going to be an interesting week. Whether I've got corona or not, time will tell. I've definitely got a cold, but it's going to be an interesting week. It's quite interesting trying to do webinars and not cough at the same time.
I'm not worried about you coughing. Cough all you like. We don't mind that. It is going to be horrific, and you're not going to be able to speak for a couple of days. Sharing with us. Thank you very much, Scott. It was great. And to everyone who has with us, we know that you chose to be here when you could have gone anywhere else. Thank you. We appreciate your time, and we hope that you have a great evening.
And I think to finish off, I always say to people, we're living in trying times. We're all locked in our houses. Often people feel not necessarily depressed, but down. And I always say to people, we might be in a lock-in, or what's it called? What are we in? A lock something. What do we call it? My brain's tired.
We're in a lockdown.
But this is a real opportunity to unlock our minds. A lockdown. We're in a lockdown, but it's a great opportunity to unlock our minds. And when we unlock our minds, we can unlock our freedom. And hopefully tonight I've shared with you some massive trends that are happening around the world. Whether we like it or not, it's happening. Corona is going to speed up those trends. And you get to decide whether you want to sit on the fence and watch, whether you want to wonder what is happening, or whether you want to participate in the trends that are happening. And that's really your choice. Good luck. Have a great journey. Enjoy your lockdown. And I hope that you figure out how to unlock your mind. And if you do, share it with others. If you found value from this, share the other webinars we've got. Share the recording with others. We want to help as many people on this planet unlock their mind, unlock their freedom, so that they can create the life that they want for them and their families. Have a good night. Thanks for your time. And wherever you are in the world, I hope you enjoyed it. We look forward to your feedback. Cheers.
Thanks, everyone.